Welcome to SOFI Wednesday. Today we're going to talk about the daily chart and the weekly chart. For SOFI, we're going to look at the long dated and short dated options on this one. We'll talk a little bit about my price targets, my ads and trims, what I'm going to do long term with it. And also we'll touch on a little bit of SOFI news that's out recently and a quick look at the general market overview. So that'll be the economic data yesterday and what's coming out today. Right, SOFI. So this price action has been crazy. The momentum's just swept this one up. It's blasted past what I thought it would get. I thought it would get maybe $12 by middle of December, and that's just been shot up. Sometimes it's good to be wrong in your predictions. I'm glad this one worked out. It is now currently hovering around my fair valuation, which was $14 from the last quarter. I haven't quite finished building out my models for Q3. Their price is looking really good. There's just a few assumptions I'm not totally happy with regarding the lending business that they've been expanding into. So hopefully I'll have that out in a few weeks. I know I promised this week, but I've been super busy. I do want to touch on valuations later on in the news section. Somebody said my valuation was wrong on Tesla yesterday, purely because they didn't agree with it. So I want to touch a little bit on valuations in the news section. But other than that, though, because we're kind of at my fair value that I'm working with at the moment, I wouldn't really add at these levels, but I would love a pullback. I've been trimming up into this range, not super aggressively, but enough. I've brought my position down to about 10% weighting, which is where I like to hold my long-term positions when they're kind of they've kind of run out of buffer room. So I don't want to add to them there unless they pull back or my fair valuation moves up. Those are the situations where I'll add, but until then I will trim the pumps. But I want to make sure I'm still at kind of 10% weighing on this one, because I do want to hold SOFI for a long time into the future. I think the company's going to be worth a lot more than it is now, and they're going to expand really rapidly. So bear that in mind. But we also rejected quite nicely from the capped call limit. Suspicious, I know, but I guess that's fine. They would have to close over that for 30 days, I think, in the notes I put here, before they could do the buyback. I think it's 30 days. I'll have to check. Oh yeah, 30 days at this level. So I've lost my train of thought now. So pullback wise, this gap fill, I would expect this to pull back. If CPI is bad today, then they're probably going to hit it, but I don't know. The CPI, there's quite a lot of buffer with the forecast being quite a lot higher, so it's possible that we still come in lower than forecast. But we'll have to wait and see. And resistance to the top side is going to be this Fibonacci level, kind of 1683. I'll probably take off a chunk of my position if we get there, though. But again, because the position's moved up, I will just drop it down to a 10% weighting, and we just keep trimming because I'm not comfortable at those levels adding, especially when we've had a parabolic move like this. It's gone pretty much up in a straight line. If we look down here, let's just, for the sake of argument, go from this one, close the low from the breakout. That's a 92% move in 26 trading days. Do you want to add to a position that's up that much? Probably not, especially when the RSI is getting overheated and the flow's kind of stalling out. It doesn't mean it can't go higher. The market is in a little bit of a FOMO loop right now. We'll see if it fades, though. Let's take a look at the weekly. Might get a better look at where things are. So this kind of area that we're currently in is going to be fairly strong resistance. We did have a measured move completing there, and we've got this historical resistance as well, and we're even getting overbought on the weekly RSI, which SOFI typically hasn't done before, which tells me it doesn't like being there, so it's likely to pull back. We'll take a look at the options market, though, see what the big fish are thinking on this one. The market's kind of changed how it looks at SOFI, so that's something to bear in mind. It's not just a bank, it is a tech company as well, so it shouldn't be priced just as a bank. All right, so straight out of the gate, we've got a fairly small expected move for the rest of the week. We are halfway through, so not surprising. And we've had quite a large move, but we are starting to get, there's a lot of strike support to the downside with a low of 9. I honestly would love to buy more shares at 9 after I've been trimming out quite aggressively. So that'd make me super happy. We've got a lot of people sitting in the money on this one. I'm just going to pull up the chart and see if there's anything we're missing at the top here. These ones will be legacy positions most likely from when the stock was a lot higher. Let's push it out a week. Again, we've still got the old strikes acting as support down here. Don't think we'll get that low again. But kind of 16, 15 looks good. So a lot of people sitting in the money on this one. That makes me feel quite happy. Let's go January 2025. I get it right this time. Much larger expected move here. $15 is going to be the resistance. That doesn't surprise me. I would love for them to close out in 30 days at $15. The dilution would just be barely anything, I think, especially after they sold some of the convertible notes already. Let me just pull this down. It's not letting me do it. I hate it when it goes buggy. It's not the best tool out there, but it's the cheapest I've found, so I will put up with it. Again, a lot of more bullish strikes. I do think the kind of my fair value for next year is probably going to be more $20, $21, just judging from what I'm looking at with my model at the moment. These ones, I don't think these are ever happening. Something really bad would happen. I think the short interest for SOFI is still quite high, even after this pump up. I'll check that though, because I'm quite curious now I've mentioned it. Let me just take a look at January 2026 while we're here. So yeah, the market's definitely getting a bit more bullish towards the end of next year, which would be in line with my expectations as well. January 2027 is on as well now, so I'm just going to take a look. Although I don't think they'll be too much interested in these just yet because they're quite fresh on the market. I mean, I would be happy to hold a position up to 27 by the end of 2026. So let me just take a look at the short interest on this one. Okay, so short interest has been coming down. This data is lagging. I think it only gets updated once a month, but this is good. It's trending down. A lot of these shorts are getting burnt and covering, which is nice. I expect it'll be even lower on the next month as well. This was only updated a few days ago, and the price has been moving up and holding up since then as well. So that's good. So like we talked about earlier, I'm still working on my models. I'm still set at fair value $14 for this one, although I expect it to be more in the $20 range when I'm finished. But someone did comment yesterday saying my valuations were wrong, and I just wanted to talk a little bit about that and why I think they're also wrong. There's 1,000 ways to skin a cat. Every investor or trader is going to value a company differently. So a fairly common one people use is a DCF. But even within that specific tool, you can have a valuation from $3 to 14 and probably higher. The results that this model generates can be impacted by the forecast period. If you're looking at 5-year, 10-year, your terminal growth rate, your discount rate, all that stuff. You can even swap out your revenue expectations for what's the word? My mind's gone blank. Profit margin and forward future PE kind of thing. So that's just one tool. On top of that, you can build out more comprehensive models and forecasts, but they're really data heavy. That's more like I like to do it. Massive spreadsheets. You can try and be more specific, but again, there's a lot of data in there that's based on an individual investor's assumptions. Even something, one small metric on that sheet, like my expectation of the multiple that the company is going to be able to command, will vastly change the data outputs on those numbers. On top of those kind of more complicated tools, you can have simple ones, your price to earnings, your price to book. You can rank it against its peers. You can look at what the company's median values are. You can use enterprise value, market value, reverse DCF. What I wanted to say was, just because the way I value a company is different from the way you value a company doesn't mean I'm wrong. It just means I'm looking at different things. I might be accounting for different timelines. and the stock in question was Tesla, he looks at it more from a value today perspective. I look at it more from a value in the future perspective. I want to know the price I'm willing to pay today is going to give me a lot of upside in the future, which is more of a look at a really aggressive growth stock. But other plays that I have, like PayPal, I would align more with something he would like, something a bit more modest, because I'm only going to be looking at the price today because it's so much cheaper than I think it should be today. My fair valuation for PayPal doesn't even include the ads business because I'm only using it as a return to the median on that one. So it's not even an investor has a set way of valuing all of their stocks. I value every single stock differently. I will use different models. I will combine different models and have averages, and it's just how I like to do it. So I really just wanted to talk about it's important to have your own valuation and your own thought process and find a price that you're willing to pay up to, and then create a trading plan around those prices. If you think a stock is going to be worth $100 in a year's time, but it's already at $50, but the actual fair value just for today is 30, does that mean you don't want to keep adding to that position even though it's going to be up a lot in a few years' time? So I just want people to think a little bit more outside of the box and realize that it's all about building a plan and having conviction in your thought process, because your strategy is based on you, not somebody else. I hope that was helpful. Maybe in the future I will try and release a bit more of my kind of valuation strategies. It's just really hard to communicate them effectively if I just dump some screenshots on. No one's going to really understand what they mean. So maybe I need to find a way of transferring that knowledge a bit more easily. Moving on to macro data, we had not really much exciting out yesterday. We had the business optimism index, which came in higher than forecast. The economic optimism also came in higher than forecast, and the chart there has taken a sharp move up. If we have a look there, so that's good. Consumer inflation expectations came in lower than forecast, but I wouldn't get too excited about that one. It's just an expectation. There was a bunch of Fed speeches yesterday. I didn't listen to any of them. Then moving on to today, we did have the mortgage data out already this morning. It did tick up again, which isn't a surprise. The 10-year yield has also gone up again. Mortgage applications actually not too bad considering the previous was negative, but honestly not really expecting much out of mortgages for a lot of reasons. But I don't think now is the time for that kind of sector to start spinning up. We do also have the core inflation data out at 1:30 before the market open. The expectation is for most of the data to be quite flat. The exception to that is the inflation rate year over year. The forecast is 2.6 over 2.4 from previous, which is actually quite a lot of buffer there. So we'll see. I think a lot of people are probably going to panic if it comes in higher, but if you just look at the chart when it loads, you can see the trend is actually down quite aggressively. If we get one uptick, I wouldn't start sounding alarm bells. We've had 1, 2, 3, 4, 5, 6, 7 months consecutively going down. So, it's important to look at the big picture when you get data like that as well. But I would certainly buy any dips created from a slightly high year-over-year rate. It doesn't faze me. I think a lot of it's still going to come down. There's probably a lot of fear right now that Trump's going to start bringing in some inflation because of all the liquidity he's going to need, but I think we would have had that with Harris anyway, so nothing too concerned about, especially in the short term. He's not even inaugurated yet, so I wouldn't panic just yet. More speeches later today, probably not going to listen to those either. The crude data, again, don't really pay attention to that. We know demand is coming down while supply is going up, so prices for oil should come down, especially as the war starts cooling off and the Middle East settles down. There should be some good news. That's a wrap. I hope you like this. I've been trying to make the videos shorter, more concise, get the information out a little bit faster. Tell me if you like it, tell me if you don't, but share this regardless, and subscribe to the channel, and I'll see you tomorrow for tomorrow's update for PayPal.